Hey, Dalton. Good afternoon, man. How are you doing?
I'm good, man. How are you?
Good, good. Let's jump right into this. So we recently closed with Rob and I think you saved him thousands of dollars in this pretty unique product. So I wanted to get you on here and can you tell us more about the Freedom Loan?
Yeah, for sure. Yeah, we got Rob set up, and it's pretty cool how much money he's going to save with this. Um, so this loan, it's great in a higher interest rate market. It's great all the time, and I'll dive into the numbers a little bit more. But it's really popular right now because what it's doing is basically taking down the barrier between banking and borrowing.
Okay.
You essentially are becoming your own bank in a sense. And what I mean by that is your checking account and your mortgage are combined in this all-in-one account, this one
Okay.
encompassing account.
Yeah.
So if you've ever heard of an offset mortgage, which is very popular overseas, New Zealand, Australia, Western Europe, UK, like it's very popular over there. Basically what that does is it takes the money in your bank and offsets the principal balance of your mortgage and
Okay.
then calculates the interest. So it's similar to that in the sense of how it calculates interest. So for example, like Rob, he had about 100 grand sitting in his savings, and he now, rather than owing 500,000 on his mortgage, he owes 400,000 and is paying interest on 400,000. But his money's not tied up in his mortgage. He
Mhm.
doesn't have to refinance or sell his home in order to get that money back. All it's doing is currently working for him, lowering the amount of interest he's paying, rather compared to just sitting in his bank account earning
Yeah.
0.1%,
Right.
0.05%, whatever that is.
Negative with inflation. Yeah,
Yeah,
exactly.
negative. You're losing money right now because of the
Right.
inflation rate. So he's like, well, this seems like a no-brainer. I'd rather my money work for me on a daily basis rather than sitting getting beat up by inflation. And that's where a lot of the savings come. It's in the saying that they say it's just math, not magic.
Right.
That's basically
Yeah.
they sweep out the rug of compounding interest in a sense. So that's
Okay.
kind of how that works.
Okay, cool. That's so it uses the money in your checking account and other investment accounts you have. Like, how does that work? And I mean, it seems really unique. So, I mean, what's the foundation to that?
Yeah, no, great question. So the way it operates is think of it all at one account essentially.
Okay.
However, it's a in between in this one account there is two buckets, right? One bucket is your checking account and the other bucket is your mortgage. Your money goes into your checking.
Mhm.
But at the end of every day, anything that's deposited in that checking will sweep over to the mortgage and lower that principal balance by 100%.
Okay. Okay, cool.
So right there, that 100%, it will lower that down by anything that gets deposited, and then it calculates the interest. So it does that every day of the month, and it basically tallies it up. And then on the following 21st, you'll have a payment due.
Hmm.
But the power is in the 100% principal because you can control how much is being deposited, right?
Right.
But the
Right.
fact that it pays 100% and then calculates interest, like that's where the bread and butter is. So that's where the power is. Think about a traditional 30-year fixed mortgage. Over that 30 years, you're paying mostly interest up until maybe you're 15.
Sure.
Once the rates are a little higher, maybe even 20. I think like for a 3-4% interest rate, it's right around that year 15 before your payment goes to 50% principal and 50% interest.
Right.
So
Right.
the way it calculates interest is allowing people to pay off these homes in 10 years or less on average without changing their spending habits.
Okay. Okay.
Like that's the average person that has it. With the lender we use, there's a 0% default rate and their average payoff is 10 years right now or less, 10 years on the higher end. Yeah.
Sure. Okay.
So, and it's, I have it myself.
Hmm.
And with our household income, our monthly expenses, and the way we have it set up, we're going to pay off our home in 8 years. And we can still make the same money over the next 8 years and it
Right.
will be completely paid off.
Gotcha. And if something changed, emergency fund or another property came up, you could kind of essentially borrow against this and change your balance and, 6 months later, repay it back. And
Yeah. So that's a great point that I left out. The mortgage part, like how I said, there's those two buckets.
right.
The mortgage part is the way it's like technically set up is a first position HELOC, which stands for home equity line of credit.
Sure.
So that's another added benefit. You don't ever have to refinance again or sell your home because it's a HELOC. You can just pull it right out. And given that it's still all in this one account with the two buckets, you have a like a credit card, like a debit credit card, Visa.
Right.
You have a checkbook. You have mobile banking. You have ATM access. You have transfer wire access. Like basically everything you have with your FDIC insured bank, you also have with this, so that your equity is always available for maybe it's a good investment property. Maybe it's a cash infusion in your business. It's great for, commission salesmen. It's great for high income, doctors, attorneys. If you want to just, take some time off, you have all this equity that essentially keeps your mortgage paid so that you don't have to go in there and make a payment every month because the equity will fund it for you in a way. So yeah, it's great because long term you're going to have less closing costs because you don't need to refinance it every 4 years like most Americans do.
So it's kind of recasting itself almost daily or monthly.
Yeah, basically.
Yeah. Okay. Very cool.
Most people have bills and expenses that come out of their bank account, sometimes daily, weekly, monthly. And rather than them just leaving that money in their checking and not doing anything on a daily, monthly, weekly basis, every single day, your dollars are working for you.
Okay.
And just the premise there is a penny saved is a penny earned.
Right.
So the way I'm using it is kind of like that as in a financial tool to build my wealth.
Okay. And essentially it's almost like a HELOC version, 2 or a hybrid smart HELOC kind of.
Smart HELOC. That's an amazing way to describe it because it's like a self-sufficient smart HELOC with the whole intention of saving you money on interest.
Okay.
Yeah. It just kind of works itself and it's out of sight, out of mind. You don't have to worry about it or think about it. It will automatically do the deposit, recast or recalculate the interest, tally it up, and then you have a monthly payment due on the following month. So yeah, that's a good way to explain it.
And then are the interest rates pretty competitive to traditional products?
Yeah. Actually, right now they are about the same, if not lower.
Okay.
You can still buy it down like any other traditional mortgage. There's a couple other, you can get a little creative. You can, buy it down, but you can also fix it for a certain amount of years and then have adjustable, like you could kind of get creative there. But really, whenever I start explaining it to people, I tell them, okay, imagine I have a magic wand and I'm waving over your head and making you forget everything you know about mortgages and interest rates. Because of the fact that it's not so much the interest rate, it's the rate of interest or the effective rate of interest, the actual amount of money you're paying on your loan, right? You could have a 3% interest on a $500,000 loan paying over 200 grand in interest, or you have a 6% with this smart HELOC and you're actually only paying like 1.5% interest. Like whenever you do as a rate, not just, but the effective rate of interest is probably going to be half that. Yeah.
Okay, cool. And, a lot of the traditional products can only be used on primary home, maybe a second home. What can a buyer use this on?
Yeah. So every state's a little different. Just get with me. Mike, you can leave my contact information in the notes here.
Yeah.
If you have more questions, but every state's a little different. Some states you can do it as your primary. Most states you can do it as a second home or investment property. So it's great for a vacation home, rental property. I've even had some real estate investors, they'll buy it and you can do an interest only feature. So if you want to increase your cash flow, some people will just pay the interest only, for first 10 years or so, and then they'll refinance or they'll sell it, or, real estate investors got their own strategies, but there's a few different ways to utilize the loan. But yeah, primary homes, second homes, investment properties, up to $2 million in the loan amount.
Up to $2 million on the loan.
Yeah.
Okay.
Yeah.
Okay.
And it's not like if you go from like 600,000 to or above, it's different rates. Like all the rates are gonna be the same. Everyone's treated the same. So it's great, really competitive with jumbo options too.
Okay. Oh, perfect. Okay. That sounds great. I mean, it sounds like a great product to have in your back pocket for sure. And what about, from contract to close? Is it 30 days, 45, 20?
Yep. 30. Mine was like 23 when I closed mine on my home. They followed Fannie Mae guidelines.
Okay.
So it's going to be the same underwriting you get anywhere else. It is full doc, so they'll want to see tax returns, but other than that, I mean, it's Fannie Mae by the book. That's what they're looking off of.
Okay.
There is actually a cool little feature though that's different than Fannie Mae, and I don't want to go down a rabbit hole too much, but asset depletion. Asset depletion is whenever you take however much money you have in your checking, your investment account, 401k, etc., and you divide it over 240 months, and then you can use it as qualifying income for your debt to income ratio. That's standard with Fannie Mae, Freddie Mac. You can do that, but there's sometimes limitations on age, type of account, etc. More so on age. Where this one, you do it over 120 months. There's not an age requirement, depending on the account, like 401k there is, but for your checking, savings, and some of your more liquid funds, you can divide over 120 and use it towards your qualifying. So oftentimes it actually, people like self-employed people or people with a lot of cash flow or a lot of cash, but don't claim a lot on their taxes, might have a better chance of qualifying for this than a traditional Fannie Mae, Freddie Mac loan.
Yeah, no, that sounds great. Yeah. I mean, there, doctors, attorneys, a lot of professionals with the high income, or especially, I've noticed self-employed, business owners, especially the real estate folks, right? Like,
yeah, a lot of real estate agents get this.
Yeah, exactly. I mean, own a lot of real estate and have problems buying primary home, right? I see it all the time. So, you definitely have to be creative. Dalton, thank you so much. And just tell us your company again is A1.
Yeah. So I run a team called Odo Home Loans team, and it's powered by A1 Mortgage. Okay. We're in most states, but you can reach me at 816-521-0969 or odohomeloans@gmail.com.
Cool.
Pretty much available all the time.
Yeah.
And we do all other types of loans as well. Your traditional, very competitive on rates, and we do everything in-house underwriting. So things are pretty streamlined as well.
Okay. Awesome. And the customer, Rob was like, man, Dalton was awesome. The best lender he's worked with, he said. So he was,
I love Rob
about that. Yeah. He loves his new home also. And glad it worked out. And it was smooth for everybody. I know even the seller's agent kind of commented on how quick it was. And I told her about the program too, and she didn't even believe it. So
most people say that. They say, "Oh, that's too good to be true." I'm like,
right.
I have it. I'm telling you, it's not. It's real.
Okay. Yeah. Awesome. Thanks so much for your time again. All your contact information is going to be below in the comments. I highly recommend reaching out to Dalton, and it's a great solution for a lot of different buyers in unique situations. So thanks again. Really appreciate it.
Yeah, no problem. Thanks for having me on, Mike.
All right. Thanks a lot. Have a good one.
You too.